Hello and welcome to the program, MIB Crypto. That's correct, the original MIB Crypto, the one and only, right here. Today we're talking about Bitcoin, how it got started, where it's at, and where it's going. Think about it. What if you could send money to anyone in the world without using a bank? No bank account, no credit card company, no government intermediary. And what if nobody, not even a government, could simply decide to create more of that money? Now, that was the basic idea behind Bitcoin. Bitcoin is now one of the world's best known financial assets, but when it was created in 2009, almost nobody had heard of it. So how did we get from a mysterious 9-page paper written by someone calling himself Satoshi Nakamoto to an asset now owned by individuals, corporations, investment funds, and governments? And perhaps more importantly, where does Bitcoin go from here? Let's start at the beginning. Why was Bitcoin created? Well, the fundamental problem Bitcoin was designed to solve is called the double spending problem. If I have a $20 bill and give it to you, I no longer have the $20 bill. But digital information can be copies. So if I have a digital $20, what's stopping me from sending you a copy while keeping another copy for myself? The traditional finance system solves this problem through trusted intermediaries. Your bank, they maintain a ledger showing how much money you have and where that money goes when you spend it. But that means you have to trust the bank. Bitcoin proposed something radically different. Instead of one institution maintaining the ledger, thousands of computers around the world would maintain copies of the same ledger. Transactions would be verified by the network, and the history would be secured using cryptography and a system called proof of work. In other words, Bitcoin attempted to create digital money without requiring a central authority. Bitcoin didn't appear out of thin air. For decades, computer scientists and cryptographers had been trying to create digital money. One of the most important movements was the cypherpunks people who believed that cryptography could give individuals greater privacy and independence from the government's financial institutions. Several people developed ideas that would eventually become important components of Bitcoin. David Chaum pioneered digital cash and cryptographic privacy. Adam Beck created Hashcash, a proof-of-work system designed to combat spam. And Day proposed something called B-Money, a decentralized digital currency concept. Nick Szabo developed the idea of BitGold, and then there was Hal Finney, an accomplished cryptographer and programmer who became one of Bitcoin's earliest users. These people didn't create Bitcoin, but they helped create the intellectual foundation that made Bitcoin possible. October 31st, 2008, someone using the name Satoshi Nakamoto published a 9-page paper titled A Bitcoin Peer-to-Peer Electronic Cash System. Satoshi proposed a decentralized payment system that didn't require a trusted third party. The timing was remarkable. The global financial crisis was raging and Lehman Brothers had collapsed. Banks were being rescued by governments and confidence in the traditional financial system was badly damaged. When Satoshi launched Bitcoin in January of 2009, the first block, the Genesis block, contained a message referencing a newspaper headline, "Chancellor on brink of second bailout for banks." Whether that was a political statement or simply a timestamp, the symbolism is difficult to ignore. Bitcoin was born in the middle of a financial crisis. Now, here's the simplest way to understand Bitcoin. Imagine a giant accounting book that is duplicated across thousands of computers. That accounting book is essentially the blockchain. When someone sends Bitcoin, the transaction is broadcast to the network. Computers verify that the sender actually has the Bitcoin and isn't trying to spend it twice. Transactions are grouped together into blocks. Bitcoin miners then compete to add the next block to the blockchain by performing enormous amounts of computational work. That's proof of work. The winning miner receives newly created Bitcoin along with transaction fees. Once a transaction becomes part of the blockchain, changing it becomes extremely difficult because doing so would require enormous computational resources. The result is a monetary system that doesn't depend on a central bank or a central database. And there is another critical feature. Bitcoin has a maximum supply of approximately 21 million coins. New Bitcoin is created through mining, but the reward given to miners is periodically cut in half. These events are called Bitcoin halvings. The result is a predictable and increasingly scarce supply. That scarcity is one of
We have
the
a long
primary
road
reasons
ahead of
Bitcoin
us,
is often called
but I assure
digital
you,
gold.
we will get there
Bitcoin's
on
early
time.
years were almost unbelievable compared with what it is today. Initially, Bitcoin was essentially worthless. There was no established market price. There were only a handful of users. Then something happened that seems almost absurd today. In May 2010, programmer Laszlo Hines paid 10,000 Bitcoin for 2 pizzas. At that time, the transaction was worth only a few dozen dollars. Today, those 10,000 Bitcoins would represent an enormous amount of money. But the important thing wasn't the value. It demonstrated that Bitcoin could easily be used as money, and Bitcoin began attracting more users. Exchanges appeared, prices increased, the network grew. Then Satoshi Nakamoto disappeared. By roughly 2011, Satoshi had stepped away from the project. Nobody knows with certainty who Satoshi even really was. One person, several people? Nobody has conclusively proven the answer, but Satoshi's disappearance may have been one of the most important events in Bitcoin's history. Bitcoin had to survive without its creator, and it did. Bitcoin's history has been filled with spectacular successes and spectacular failures. One of the earliest was Mt. Gox. Mt. Gox became the world's largest Bitcoin exchange. Then in 2014, it collapsed after hundreds of thousands of Bitcoin disappeared. For many people, this appeared to be the end of Bitcoin, but an important distinction became clear. Mt. Gox had failed, Bitcoin had not. The network continued operating, that pattern would repeat itself. Bitcoin exchanges failed, companies failed, investors lost fortunes, governments threatened regulation, and yet the underlying network continued. Bitcoin's next great explosion came in 2017. The price rose dramatically and eventually approached $20,000. Bitcoin suddenly became a global phenomenon, but the boom was followed by a brutal crash. Bitcoin lost roughly 80% of its value. Critics declared that Bitcoin was finished. They were wrong. The pattern became familiar. Boom, crash, recovery, new high, new crash. Bitcoin's volatility became one of its defining characteristics. The next major transformation was the arrival of large corporations and institutional investors. One of the most important companies was MicroStrategy, which made Bitcoin a major component of its corporate treasury strategy. Other companies followed. Then Wall Street entered the picture. In January 2024, U.S. regulators approved spot Bitcoin, exchange-traded products. That was a major turning point. Investors can now gain Bitcoin exposure through traditional financial markets without having to directly purchase and store Bitcoin themselves. Companies such as BlackRock and Fidelity became major players in the Bitcoin investment ecosystem. This created one of the great ironies of Bitcoin. Bitcoin was originally created as an alternative to the traditional financial system. Now, the traditional financial system was building investment products around Bitcoin. So we have to ask, where's Bitcoin today? Well, where does Bitcoin stand now?
We have a long road ahead of us.
Bitcoin is no longer an obscure experiment. It is a global financial asset. Its price is still extremely volatile, but the market is dramatically larger and more institutional than it was 10 or 15 years ago. Bitcoin's price is now influenced by many of the same forces that influence other financial markets. Interest rates, global liquidity, institutional investment, government regulation, the strength of the dollar, geopolitical uncertainty, and investor sentiment. Bitcoin has therefore entered a strange new phase. It was designed to operate outside of the traditional financial system, but it is increasingly becoming part of that system. There are legitimate reasons to be skeptical. The biggest is volatility. Bitcoin can lose enormous amounts of value very quickly. It also doesn't generate earnings, dividends, or interest. A stock represents ownership in a business. A bond pays interest. Real estate can produce rent. Bitcoin's value depends primarily on what someone else is willing to pay for it. There are also regulatory risks. Governments can regulate exchanges, taxation, and financial institutions. Bitcoin's energy consumption is another major controversy because proof of work requires substantial electricity, and Bitcoin's base network isn't designed to process transactions at the scale of Visa or MasterCard. Technologies such as the Lightning Network attempt to solve some of these limitations. But the bullish argument is powerful. Bitcoin is scarce. Its supply is predictable. It can be transferred globally. It operates 24 hours a day. It doesn't require a bank to hold it, and no central authority can simply decide to create another 50 million Bitcoin. Most importantly, Bitcoin has survived. It survived the disappearance of the creator. It survived Mt. Gox. It survived enormous price crashes. It survived regulatory attacks. It survived repeated predictions that it would disappear. And now it has attracted some of the world's largest financial institutions. That doesn't guarantee Bitcoin will succeed forever, but 17 years of survival is significant. There are several possible futures for Bitcoin. The first is what Bitcoin becomes, digital gold. Under this scenario, Bitcoin doesn't replace the dollar. Instead, individuals, corporations, and governments hold it as a scarce store of value. The second possibility is that Bitcoin becomes a global monetary network. Technologies built on top of Bitcoin could allow millions of transactions, while the Bitcoin blockchain remains the underlying settlement system. The third possibility is perhaps the most interesting. Bitcoin becomes a strategic reserve asset. If governments begin holding Bitcoin alongside gold and foreign currencies, demand could increase dramatically. But there's also a fourth possibility. Bitcoin could remain primarily a speculative asset. It could continue to rise and fall dramatically without ever becoming a major form of everyday money. And we shouldn't ignore the possibility that some future technology eventually replaces it. So what's the conclusion? So why was Bitcoin created? At its simplest, Bitcoin was an attempt to create digital money that didn't require a trusted central authority. But Bitcoin became much more than that. It brought together decades of work in cryptography, digital cash, and computer science. Satoshi Nakamoto assembled those ideas into a functioning network and then disappeared. What followed was one of the most extraordinary financial experiments in modern history. Bitcoin went from essentially worthless internet money to a globally recognized financial asset. It survived crashes, scandals, exchange failures, and government skepticism. And now Wall Street corporations and governments are taking it seriously. That leaves us with an enormous question. What will Bitcoin become over the next 17 years? Digital gold, a global reserve asset, a worldwide payment network, or simply one of the greatest speculative assets ever created? We don't know. But one thing is certain. When Satoshi Nakamoto launched Bitcoin in 2009, almost nobody believed it would still matter 17 years later. Today, Bitcoin is impossible to ignore, and the story may only be beginning. This is MIB Crypto, and that's the story.